Traders, welcome back to technical analysis on natural gas, UNG, US dollar, oil, gold, and silver. So we're looking at their support and resistance levels, as well as what's the most likely scenario where price will be heading into later next week. And I did the stock market update video where I did the S&P, or not S&P, QQQ, as well as the mega cap tech, 7 of them, Tesla, Nvidia, Apple, Amazon, Google, Microsoft, all 7 of them on the previous video. So check that out if you guys haven't. And let's get started on commodities. So natural gas, new low of the year. So I talked about trend changes, and I stress out on it that as long as we don't get trend changes, even if we get these big bounces, they don't matter. Just like I've been talking about this, bears are in absolute full control, and don't fight the trend until we see the trend changes. As you can see, even on these bounces, 11%, right? That's pretty darn big. And this is where bulls need to hold a higher low, meaning they need to make a low that is higher than the prior low and break to a higher high for the trend to change. But they never did that, even with an 11% bounce, right? If the 11% bounce, they have a lot of room, right? Even with a big retracement, they still have room to make that higher low, but they didn't, and they made it lower low. So that is a sign of red flag. Same thing over here. Big enough bounce, 7.5%. Could have made it a higher low and trend changed the trend, but it didn't. So as long as bulls can't change trends, bears are in absolute full control. And also very clear EMA rejection as well. The daily time frame, and this tail looking line is EMA 12, so exponential moving average 12. And yeah, perfect rejection. 1, 2, 3, 4. So as long as we do not get over EMA 12 and it's still in a downtrend, no signs of bulls at this moment. And we pretty much just close the low of the day. And so, yeah, so you can try to nail the bottom, but you probably bang yourself on head in the wall, especially with natural gas. It can keep on going and going and going until you blow up your count. So yeah, just wait for the trend to change, and then let's say let's say it bounces like this, right? Big move up, you miss like 10% of the move, right? You're like, darn it, and then we head from the higher low, and then we finally get that trend change starting to shape up maybe, and you get in, and then we change the trend, and we break above the EMA 12 as well. You miss 10%, right? And then you catch the rest of the move, which is 20, 30% of the rest of the move or something like that, right? Versus you trying to nail the bottom here, right? Bounce, try, no, stop out, try to nail the bottom here again, nope, bounce, nope, here again, nope, bounce, stopped out, bounce here again, stopped out. Even some people, don't put stop losses. So the next thing you know, you're down like 20%, right? So if you just wait for that trend to change, miss 10%, but you catch the rest of the move versus losing over and over and over trying to catch the bottom. Or you can just go with the trend and short this thing until the trend changes. We are a little bit into the hole, so I wouldn't really be shorting it down here either. Yeah, it's been down 41%. Although we're not really oversold on the daily yet, you can see this was just kind of flatlining right above it. And the weekly is not oversold yet, so it could still be more downside. So I mean, if we bounce, and this EMA catches up, and it hits that wall again, and then we start dropping, I mean, it's probably going to head lower again. So that may be a short. If we do get that bounce, cool things off a little bit, hit the EMA, continue to short. But at this moment, no signs of bulls, and we will just wait until we see some kind of bulls. And right now, it's absolute full bear control. And this is similar to when a stock is all-time highs, especially like the stock market. It just keeps on going and going and going until it finds resistance. This is what it's doing right now on the opposite direction. So it's going to keep on going until we find some kind of support. Bulls will show us some kind of support, but at this moment, no signs of that yet. We may form something like a sideways range where we form support and then break above, or we just V-shape and then get that trend change. Both of those, but at this moment, wouldn't just randomly pray for it. We don't know where that's going to form at this moment. All right, if you guys want to learn more, go to my Patreon page, check out that 101, or if you just want to talk about it first. Go to that free link, 15-minute free call, and let's continue. Well, I can join the Discord link as well. The chat room is free. Come talk about stocks, commodities, hang out, and let's go to UNG. UNG, similar idea here. Let's go to the daily charts, daily time frame. As you can see, continue to reject from EMA 12 and reject from EMA 12 again. So as long as NatGas is not getting over EMA 12, UNG is not going to get over EMA 12. And same thing, low of the year, pretty much 52 all-time low probably. So we're looking for that trend change as well. Give me that minimum. You guys don't always talk about this. Hourly trend is the bare minimum for any kind of reversals. We don't even get that at this moment, right? Big enough hourly bounce, try to break to a higher high, right? This is a higher low, lower than this high, right? But it needs to make a higher high above this high for the trend to change. Can even do that, and then hourly downtrend continues. So bare minimum, we don't even see the bare minimum from bulls. We have one over here, hourly uptrend, but they couldn't change anything else on a higher turn time frame. They got the bare minimum, but that's it. They didn't really change anything else on the higher term time frame, so that's not gonna do much if you just only can change the hourly trend. All right, I talked about this one, equilibrium, the dollar potentially breaking after the FOMC meeting, and we did. So big move up, big move down, big move up, big move down, big move down. It's tightening up, and finally it broke bear for now because of recession fears as well as more rate cut priced in now for the next 6 months or even for the next year. So the more rate cut there is, the more chances of the dollar potentially dropping. So that's currently what's happening, and we'll see if maybe you'll get like a emergency meeting and they'll cut 25, but if not, they're probably gonna cut 50 in September now because they didn't do that on last meeting. So you can see the bonds were ripping TLT as well on Friday, which caused the dollar to a lot of macro things going on in the market at this moment. So saw that rate cut, which affects oil as well. So a recession means oil is going to get cheaper. So you guys talk about this equilibrium as well. Big up, big down, big up, down, big up, down, up. Did not break the prior high, down again. And with the recession fear, this will obviously head lower, which is happening right now. But doesn't mean it's going to tank to zero or anything. But still, technical wise, you can see we haven't broken this low yet, right? So it's still tightening up. Maybe it could bounce over here and then hit that and just continue to tighten up. But for now, it needs to break this low and break through this maroon looking line for a bear break. But so for now, we're still looking at the tightening range. See a little bit of lower wick, but that's it. And it bounces from here, then I'm continuing to looking for another potential tightening range into later the year. Gold here, no signs of red flag, but it's looking like it wants to form some kind of equilibrium here because Friday we didn't make a new high. So big move up, big move down, big move up, did not make a new high. Potential tightening range here as well. But bulls are happy. Pretty much we're consolidating at the high of the range, almost close to all-time high. So there's no complaining about bulls. And yeah, if you make such a big move and then you can get sideways consolidation through time, then that's very good for the bulls. Unless this becomes a distribution zone where we consolidate and then get a bear break. That would be a red flag. But for now, we don't see that yet. So the only thing I don't like is that silver is underperforming gold. We want to see silver lead in terms of gold and silver, but currently it's not leading. So either silver catches up to gold and starts leading, or gold's going to roll over and join silver. So we'll see about that. But as long as silver chart stays relatively okay, then gold may continue to stay consolidation in this sideways range. Or if you start looking at silver, it starts breaking down into support and then breaking through support, then probably gold is going to follow silver at one point, and then might get that liquidation bear break, and then there's another sideways range here, and then if that breaks, that'll be not much volume trade here, so it'd be an easy flush from there. So I have to keep watch on silver for sure to make sure. If you're in gold, make sure to watch silver. Don't get that break out of this. But if it break down below from here, I'm looking back at down potentially at this 26.6 support zone. And if we break above, we need to break above this 29. You can see all this support, previous support, now acting as resistance. So if we break above 29, I'm looking at that 29.74. All right, that's all for you guys. And feel free to comment below if you have any questions, and check out the stock market video if you guys are looking for that. Posted yesterday. And see you guys around. Have a great rest of you guys' weekend.